Ting. Hello guys, welcome, karibuni sana to this channel again. As always, doing everyday trade reviews, and today it will be a short one because we already know the buyers. We talked the previous video that was yesterday, and what I was waiting ready for today. So let's get cracking. So what you can see here in my charts, I guess you can view it. This is the Nasdaq as many features. You can see this path that it's trending down, then would reverse up, meaning my bias for today was I want to see price to trace to this 4-hour discount fair value gap. From then I want to see it retrace higher, and let's see how price played out, and let's get cracking. So why did I come, first of all I would like, why did I choose, or how did I come up with my bearish bias for today? So I'll go back to the 4-hour time frame, because generally we know we are bullish and we want to retrace onto this daily fair value gap here, but price had showed this retracement, from which upon going to lower time frames like the 1 hour, I confirmed my bearish order flow. Then that's why I decided that for today I'm expecting lower prices to retrace into that 4-hour discount fair value gap, then retrace higher. So I used my favorite tool, the Fibonacci tool, placed it at the top of this high, because these highs around this point had not yet been formed. They were not formed. So I used the previous high and identified my discount. And you can see the 4-hour level is below the discount level. I guess this 0.5 line of the Fibonacci. Let me extend it kinda. You can see the 4-hour discount fair value gap is below this 50 level. So I want to see, because yesterday we said we buy uh when prices are expensive and sell when prices are cheaper. Is that? No, the opposite is true. We sell when prices are expensive and buy when prices are cheaper. Yeah, so that's what we want to see here. We want to, because we are generally in a buy model, we want to see price retrace to discount where prices are cheaper, then we can rally up for buys. So that's why I want to see price retrace to this 4-hour discount level, then from there we can look for conferences for buys. So let's see what I had confirmed to see to confirm my bearish order flow. Remember guys, I only started trading at 9:30. Let me mark it there. Let me make it blue, guys. I like blue. Red for news. I what's this line? Oh, I like it being blue. Red is for news, but for my opening I like it to be blue. So I can't trade until it's 9:30. And as I was reading price action, I mean, sorry, I noticed something. I was kind of wrong somewhere, but I'll be telling you guys where I was wrong. So before 9:30, what are my conferences? I want to see price create a market structure shift. We can see here these low, these candles, low, lower low, higher low. These are swing. So I wanted to see this swing, a candle break and close below. So using my trend line, I can highlight a market structure shift. This is my market structure shift. I want to use, it should be at the center. Yeah, that's my market structure shift. You can see it, this candle closed below, But if you weren't sure, this candle had also closed below. Since we are not in our trading hours, well and good. So I observed that, and I was observing price, and I'll drop to the lower time frames, and I guess I'll tell you why I did enter, why I did anticipate to see higher prices, where I really went wrong. Well, I was trying to, I made a video, I guess I'll post it. I was wrong somewhere and I made a mistake. You'll see it. That's where I'm doing this, to identify mistakes and correct them. Okay, so we can see a market structure shift there, confirming to us that we are generally in bearish mode. So dropping to my lower time frame, this was I drew this, I guess it was yesterday. I was analyzing my charts yesterday PM 10 p.m. I analyzed, and that's when I drew these. So we can see the market has not yet retraced there, but it's playing, it's consolidating around that place. Well and good. We'll wait until it's into this 4-hour fair value gap. The this 4-hour discount fair value gap, then from there we can look for buys. So guys, we drop to the lower time frames. We can see our MSs there, and at around 2 a.m. sorry, 2 a.m. a lows formed, and this high was a candle closed above this high because the liquidity above this high was engaged, and this candle closed above it. So this is another market structure shift. But because generally I'm in a sell model, I'm in a sell. Okay, so I want to determine to which level should I anticipate this price retrace to. So I used my Fibonacci tool. As you can know, this is my favorite tool. I like it to use it everywhere. So I used the Fibonacci tool on this bearish price leg. Sorry, bearish price leg from the high of this candle here to the low of this candle to determine my 50 level. And around there, going to the 1 hour, my chart is so dirty guys, but I beg that you might, because if I delete anything I might not really have something to tell, because I want to explain to you how I did see price play. So also the Fibonacci, the high to the low is also the same here. So the 50 level is at this point, you can see it, the red line. Let me try to make it kind of thicker. I don't know, two, yeah, that's the Fib tool. You can see the 50 level, the red line. So above it, I want to see what can really make price to go higher. Okay, I spotted this 1 hour inversion fair value gap. I guess you can see it over here. Yeah, that I spotted that. So in this, I wanted to see how price would really react on at this key level, because this was my key level at that point. So back to the 15 minutes chart. So this is the 1 hour chart. I guess you can see it there. Let me extend it over. I guess you can see it, my 1 hour. I guess there's another trade, but we'll check on that. So yeah, and above it I had deleted some stuffs. Here we can see equal, okay, relative equal highs here. Those highs, let me use a thin line, that's buy side liquidity above that level. And also we can spot these 15 minutes inversion of the value gap, this candles low and this candles high. It's this, okay, that's the 15 minutes. fair value gap, and also we had also this buy side liquidity above that high. See, so as I was looking on price, these were my level of interest. I wanted to see price tap into this 15 minutes fair value gap and also this 1 hour inversion fair value gap, clearing these liquidities. This liquidity, I guess you can see it, the one I've labeled. Yeah, this one, the high, and these equal highs. I can now delete it because you can see these equal highs. There's liquidity there that was encaged, and this high liquidity was encaged. So I was watching on how price was to tap. I wanted to see a reversal from this point, but I didn't observe something we call session liquidities. Okay, session liquidities, I didn't really observe it. I was not keen on it, but now it's something I've learned that I should be keen on session liquidities, because I didn't want to see these higher prices, but it didn't happen. What did price retrace higher to this point? It came to take these highs, yesterday, Tuesday PM highs, because market usually moves because of the reasons liquidity and imbalances. So it came for this liquidity, then we can see it rallies down. As I was looking at price, I made an impulsive, like, it was an impulsive trade, because I'm just assuming this is an account, like I'm just making a real trade. Okay, so if I was to be an account, I was to lose money, I'll post it, and guys you will see it, and that's a mistake that I have learned from. I did enter trade well, my confluences had not yet been confirmed, none, like written. I just, so like, because prices has retraced into this fair value gap, then I'm expecting it to go lower, but that was fucking wrong. I was so wrong. But I've learned from that. So these previous day PM session liquidities was cleared during the 9:30 open, and dropping down, I will show you. And by the way, there was this when market was at around this place, as it was leaving this low, I was tape reading. I was reading price actions here. You can see price retraced higher, made a high. I used my Fibonacci tool to distinguish the discount arrays. I spotted this order block that was a discount. Price reacted off it, off well. Price retraced higher. As it was retracing down, I noticed this fair value gap, but it was not at discount level. We can see price went higher, took the high here. Under the 3 minutes, it was like I had something in my mind that maybe this opportunity, the market will rally up sharply, uh, not tapping into this level that I had identified, because I used my Fibonacci tool, the high to the low, and my 50% was around this point, and then I spotted this fair value gap. So the market at first tapped into this. While watching price, it's so, like, emotions are being involved, like it's real time, whereby you're experiencing FOMO, fear of missing out, you see. So as I saw price retrace, I'd seen, if I was to be into a trade, I was to enter at this point, anywhere above this, because I saw this price action under the 1 minute. Like I just saw that I've missed out on this trade if I was to trade. But the good thing is I follow my rules, no trading before 9:30. So you can see this huge move. Imagine you've been watching price, you're watching price, and price has reacted off this fair value gap here, rallying sharply. So you are, and how many minutes are these you are watching? 1 2 3 4 5 6 7 8 10 10 minutes. You can see price is not showing any sign to retrace lower, and you're watching it. So you can, the emotions kind of part of it. Then suddenly there was this huge price action downwards, and that's where I saw like patience is really in this market. We really need patience. So where did it retrace to? It retraced to the fair value gap at the discount level. This fair value gap there. Then price sharply rallied up to clear the buy side, the equal highs buy side. That was my target at first, and the 1 hour fair value gap. Then we can see price at around 9, the 9:30 open. It rallied really up. I'll be posting a video, but something happened. It didn't run all through. I guess I'm using my phone, so and the sleep of my, I had placed my sleep at 30 minutes, so I went out to do something, and that happened. But the trade entry, so bad, it was so bad of me. I didn't follow anything. So at around 9 at around 9:30, because we had by the news at around 9:15, I was anticipating it to pull price lower, but that did happen because there's no effect at around 9:15. You see there, 9:15, there was no much effect, but at 9:30 the market rallied up, took the PM session, the previous day PM session liquidity, then hugely rallied down, came up, took the liquidity here, liquidity there, and then rallied sharply, creating a market structure shift. I like to use mostly 5 minutes market structure shift. So we saw it there. It created a fair value gap, upon which I did made my entry with the highs there. Remember, yeah, with the highs there, and targeted these 4-hour discount. And I'm learning something, by the way. It was these are trade over 1 to 2.8, but guys, if you make a plan, like I'm learning this, just stick to your plan. Because let's see, price did retrace and it consolidated really a lot for, let's see, how many, 1 2 3, around 10:05. That's around 10, from 10 to 11:45. This was a consolidation to 11:50. From 10 to 11:50, you can see that's approximately an hour and 50 minutes. You just watching price do be choppy, like it's not moving. You see, it's so difficult in real market conditions. Okay, so but at the end of the day, it broke through because my buyers was right. And imagine, my rule says I have to take a 1 to 2, 1 to 2. My 1 to 2, sorry, was to be, yeah, at this point. After a long wait, I would have taken my profits. But guess what? The greed in me, or the whatever, I decided to take these at 2.8. Okay, so the market didn't tap into, but it retraced at around this point. It started retracing higher. Okay, it retraced higher back, cleared these buy side liquidities because there's lots of liquidity here, this liquidity was grabbed, but above here there was lots of liquidity. Above that high there was lots of liquidity. The market retraced back into our entry. You see, now we are at break even because maybe we didn't collect our 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 profits. Okay, and at around this point you can see there's these arrows I had used. I wanted to see, because there's a fair value gap here, I used these candles high and these candles low as my price leg. I used my Fibonacci and identified these zones. So these I wanted to retrace into this fair value gap and drop lower, but that didn't happen because this is the market. So it retraced back, cleared this buy side liquidities, went back to the 15 minutes time frame. And the PM sessions, we usually trade at around 1:30. So PM session I watch price 1:30 is 1:30. There it is, the PM session, because I trade the AM and the PM, and the AM ends mostly at noon. Yeah, there it is. So we saw price retrace into that our entry point. Then from there I wanted to see how price really reacts upon this. And my entry, I guess, was in the 1 minute time frame, because it was at a key level whereby I saw this market structure shift there. I did this no, I guess my high, yeah, I guess I'm right, but I had a 1 to 2, maybe because I'm using my phone it could have moved. My high was at that point targeting a 1 to 2. So I saw this market structure shift at a key level, and price had reacted well off the 15 minutes fair value gap, and also creating a market structure shift. It broke through the 1 hour inversion fair value gap. This, sorry guys, it broke below that, leaving a fair value gap there. So I entered on these lower fair value gap, because sometimes some gaps are led to be breakaway gaps whereby they're not being traded into. So I entered at that key level at this fair value gap. Price decreased higher into this fair value gap here. Let me show you these candles low and these candles high. We have a fair value gap there, and reacted off that by closing below, sharply rallied down. Price rallied up to this fair value gap. This acted as resistance, and also the 1 hour inversion fair value gap there. Then rallied down, creating this order block. Market rallied down, it's now starting to rally up. These candles acting as resistance. I don't want to see it retrace above, but this is the markets, so we'll wait and see what the markets will offer here. So these are trade maybe I could be in before the close of the day, that is mostly at 4. So I guess we shall be looking at it tomorrow, and watch it, see what it, because I ain't gonna delete this until everything is met, like the previous day's trade on was it on Tuesday? Yeah, it was on no, yeah, on Tuesday. The trade I took, that TP has not yet been hit. This trade, until it's hit, if the SL is taken out, we just also learn from that and draw a lesson. But I won't be clearing anything around this point. Want to really see how price acts, reacts to some levels, and yeah, from there I guess we can draw conclusions. I guess this liquidity here should be cleared. This low over here, the liquidity, sorry, this low over here, the liquidity should be cleared, and price should tap into this, and then we'll look for confluences for higher prices. So until next time, asanteni sana. I'll keep you updated on this price action. So guys, please subscribe to my channel if you're watching this. I'll really appreciate, and put on the notification bell so that whenever we release or we go live, you may get notified. And so guys, asanteni sana. Until we meet again, see you next time. Be safe. Like it, napenda. Bye.